Jonathan Davis is an economist and investment advisor. Hello, Jonathan.
Hello, Jonathan.
Have banks stopped looking after us, the consumers?
Well, you're making a suggestion there that they have previously looked after us. Banks, for generations, have been there to make money for themselves and their shareholders. Inevitably, that means that when the sun is shining, they hand out umbrellas, and when it's raining, they take them back. And the fact is, over the last 15 years, they threw money at people who ultimately are going to find it very difficult to pay the money back. 140,000 people are going to go bankrupt this year, 122,000 last year. And it's not just about normal banking products, as in mortgages and loans and credit cards. It's about the pensions and investments. You mentioned ISAs just a moment there. 80 to 90% of all complaints about financial services are about bankers. They're not about independent financial advisors. They're about bankers. And bankers are taking money from people hand over fist. And no, they're not lending money. Their mortgages are down 50% from 3 years ago. Buy-to-let mortgages are down 80%. And small businesses are finding it more difficult to get a loan than the Americans in finding Osama bin Laden.
But in effect, if they were to take a more charitable approach, then they would no longer be businesses, would they?
Exactly. Why should they take a charitable approach? People say, well, we own half the banks, therefore the banks should take a charitable approach. Well, I'm sorry, that is not the reason why we own half the banks. We own half the banks because the banks in the first place destroyed the UK economy by massively over-lending. So the government took the decision, I happen to think it was the wrong decision, but the government took the decision to give them hundreds of billions of pounds in order to try and keep the economy going. In the process, of course, all they did was allow massively wealthy bankers to continue to get their multi-million pound bonuses. And, these profits in the last year, it's come ultimately not from bank work, but from government intervention, slashing of interest rates. Markets have gone through the roof, loans from governments to banks. That's why the banks have made fortunes. But are they lending it? Of course they're not. They're giving out dividends and bonuses. And they won't lend it because they haven't got the money themselves.
So should the government legislate then to force the banks to... No?
No, because on that basis, they'd be putting money into small businesses and consumers who actually are going to find it very, very difficult to pay it back. Your previous caller talked about a £185,000 house and a £42,000 mortgage, and he wants some more money to tide him over. On the assumption that he will be able to sell his house in the next few months, well, people need to wake up to reality. The numbers of properties selling are massively down. The only reason why prices are up is because mortgage rates came massively down because of the Bank of England, so people didn't put their properties in the market. But they're doing so now. They've been doing so for the past 6-9 months. You just watch prices fall, and that's the reason why the banks aren't lending to apparent secure good borrowers like Sean, because although it's a relatively small mortgage, he said himself his income's gone down. He cannot be sure that he can sell his house. The market is dead. The banks know it. And that's why they're being very ultra-cautious in lending and pushing more money down people's throats.
Jonathan, I feel like I lie down now. Thanks very much indeed for your time. Jonathan Davis, who's an economist and investment advisor. Shirley's in Milton Keynes. Hello, Shirley.